Hello, friends. Thank you for joining us today. I'm excited to share the key highlights of our NFO, the Kotak Dividend Yield Fund, and why we believe that this strategy can play a valuable role in your investment journey. Let's start with the basics. When you invest in companies, you are not just hoping for their share prices to rise, you're also looking for tangible rewards along the way. That's where dividends come in. Dividends are regular payouts from a company's profit, a way for companies to give back to their investors. Now, when you look at dividend yield, that is the annual dividend as a percentage of the share price of a company, and that gives you a clear sense of what you are earning on your investments. But, friends, why do dividends matter so much? Consistent dividend payouts are often a sign of a company's financial health and management's confidence in the future. So, what kind of companies pay dividends? Typically, these are established sector leaders, businesses with strong competitive advantage, robust cash flows, and a disciplined approach to sharing profits with investors. These companies tend to be more resilient during market downturns, offering a cushion when times get volatile, even at the same time participating in market upside. However, there are some common myths that I would like to address. Some believe that a dividend yield fund guarantees regular income or that high dividend yield always means safe investments. The reality is a little bit more nuanced. A high yield can sometimes signal a company in distress, and therefore it's crucial to focus on sustainability and strong fundamentals. Others often think that dividend stocks are boring, they don't grow, but many leading dividend players are also steady growth companies. The third myth is that I can buy high dividend stocks myself. And while it might be easy or it might seem to be easy to pick high dividend yield stocks yourself, our fund uses rigorous quantitative and qualitative filters and diversification to avoid common pitfalls like value traps or sudden dividend cuts that an individual investor might miss. Importantly, investing in a dividend yield fund as opposed to investing in stocks directly for dividends is far more tax efficient, since as an individual investor, tax on dividend is at the marginal rate of tax. Historically, high dividend yield companies have outperformed the broader market over the long term. For example, the Nifty Dividend Opportunities 50 TRI has delivered higher compounded annual growth rate than the Nifty 500 TRI. Moreover, these companies have a higher probability of weathering bear market phases, while of course participating in bull markets. Interestingly, they often trade at a discount to the broader market, offering attractive entry points and potential upside. So friends, what makes Kotak Dividend Yield Fund unique? Our strategy will invest in dividend yielding companies or those companies conducting buybacks at least once in the last 3 years. But we don't stop here. We look at a range of factors like cash flow generation, earnings growth, business fundamentals, expansion plans, and management quality. We diversify across sectors to manage volatility and use a flexi-cap bottom-up approach to stock selection, focusing on growth at a reasonable price. Our investment universe is broad, covering all market caps, and we rely on our strong in-house research capabilities to identify the best opportunities. So, who is this fund for? If you want professional help in selecting high-quality companies which regularly pay dividend to the shareholder, then this fund could be a great fit. It's also suitable for those who are looking to diversify their equity allocation and mitigate risk. You might be wondering that why consider a dividend yield fund now? In today's environment, where market valuations are somewhat elevated and volatility is ever present, focusing on companies with strong fundamentals and a track record of rewarding shareholders may help in providing both stability and steady growth. It's a strategy that has stood the test of time and that can complement other styles in your portfolio. A few quick details. The Kotak Dividend Yield Fund is an open-ended equity scheme which will be benchmarked to the Nifty 500 TRI. Our team, with decades of experience, is committed to managing your investments with discipline and care. But before I close, let me also remind you that all investments carry risk and past performance is not a guarantee of any future results. The NFO for this fund is open from 5th of Jan to 19th of January 2026. And we look forward to partnering with you on your investment journey with the Kotak Dividend Yield Fund. Thank you. Stay safe, stay invested.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.